Thank you for joining us. So, 2 decades, right? 2 decades in leadership positions across a number of different financial services and fintech firms, including American Express and Visa, Wells Fargo, Lloyd's. Can you talk to us a little bit about your journey, insights along the way, and what led you to found Varo, which we'll go into in some depth afterwards?
Sure. First off, it's Varo, like
Varo.
bar, car, yeah. So anyhow, but so yes, I graduated Cornell a long time ago. I don't want to say when, but and took a number of roles in some of the leading financial services companies around the world. So I was at GE Capital. I took a job early at American Express back in the mid-90s, probably before some of you were born. And then I went to Wells Fargo, and then back to America. I was actually at Lloyd's and then back to American Express. And throughout all of these jobs, I very much was kind of a creator builder. Like I was starting new business units. I mean, at GE Capital, I started the first like corporate procurement card, built an industrial bank early on in my career, went to Wells, started the first online consumer credit business, kind of grew it to about $2 billion. It was in the UK. I was introducing new products through Lloyd's, through Amex, all the rest of it. And it was exciting and fulfilling to have a lot of resources, have access to partners and talent to be able to do this. But there was sort of an underlying theme that started to become more pronounced for me a little bit later in my career, that the system was great for people who had money. Like, and it was working really well. And there was like people like me that were trying to build all these great products and create rewards on credit cards and, you know, ways for people to buy bigger houses and all the rest of that stuff. But like for people who didn't have money or who were starting out or were trying to just kind of make ends meet, the system was really tough. And I saw it firsthand, like when, you know, there was a P&L gap. And there was all this conversation about the different types of fees and charges and how you could reverse the interest rate hierarchy so that you could extract more income. And, you know, I would step back and say, but like, who's paying that? And it was often the people that didn't have access to the system or had barely had access and were really struggling to kind of hold it together. And so that ultimately led to that in the combination of like just having had enough of being in big companies. Like I was at Amex the second time and I just sort of said, look, you know, before I get too old, I want to go do something really innovative, but could also be truly impactful. And, you know, we're living in a world and in an age of growing inequality, but technology was advancing at the same time. And I felt like with the confluence of, you know, how technologies were coming together, everything from, you know, mobile, cloud, AI, that you could actually build something that could effectively serve this huge population of people that were being left behind. And so that was really the kind of inspiration that inspired me to set up Varo. And you go back to the original pitch decks 6 years ago when I started the company, and nothing's really changed other than a lot of execution, and we'll talk more about that. But yeah, it was really, but my desire to create this company was absolutely born in a set of sort of practitioner experiences that sort of led me to realize that the world needs something different and something better that could actually have ultimately a societal level impact. And we'll talk more about that.
Yep. And how'd you come up with the name Varo?
So there's 2 stories I tell people, the real story and then the story I like to tell. But the story I like to tell is that in Italian, the word Varo is when you christen a boat. You break a bottle of champagne or Prosecco over the mast of the boat and you say Varo, which is like a new beginning. But that's not the real story. The real story is that I didn't know what to call it, so I hired a naming consultant. We went through a bunch of names, and I had a group of millennials that were advising at the time, and they all loved the name Varo, and they had a choice of about like a dozen names, and so that's how ultimately Varo came into being.
Well, I mispronounced Varo as Varo, and then I remembered, you know, I started a company called Behance, and for like every time in Europe, people said, "Oh, you work for Behance."
That's right.
So I empathize. So it's been a growth journey over the last 4 years, and including you recently raised north of $500 million at a reported valuation of well north of $2 billion. Incredible investors across the board, Warburg Pincus, Rise Fund, Harbor Vesta, et cetera, et cetera. So maybe you can give us an overview of what Varo is, and also, how does it make money also as a company?
Yeah, sure. So first and foremost, we're a bank. So we're all digital. We're FDIC insured. It's using sophisticated design methodologies to sort of really build a bank around the needs of our customer. And so when I started the company, I went to our friends in Silicon Valley and I said, I want to build a bank, and I'm going to need to raise all this capital. And they're like, you're out of your mind. Like, will you go build a little app? And I said, no, I really need to build a bank. So then I started to talk to the sort of the bigger money investors in New York, who said, yes, actually, the world needs this, and we're going to back you. But so we started out using something called a sponsor bank, which is a smaller bank that would allow us to develop what's called the demand deposit account, which is really the checking account, and then a savings account. And we did that in the early days just to get proof of the product market fit, that the concept that you could actually help people come into a digital banking platform, eliminate hundreds of dollars of fees, give them early paychecks, help them start building savings habits, was actually something that there was going to be real demand for. And so we did that in the early days working with the Bancorp Bank. And in parallel, we started a process of applying for a full U.S. national banking charter, so an OCC national banking charter, which is actually the hardest to get. It's the same charter that Chase and Bank of America and Wells Fargo have, and there had been none of these. So that was the other thing that everybody thought I was crazy. Like, well, they're not exactly handing out charters. And so, but we kind of we were mindful. We had the strength of our conviction that, like, we really needed to do this. And so we went through a pretty onerous, kind of 3.5-year process, working with all the federal regulators. And we were the first, and I'm still proud to say we're still the only fintech that's been approved to be operating as a full national bank. And with the bank charter, it allows us to do so much more than just the basic sort of checking and savings. It allows us now to start offering credit. It also allows us to be building products like secured credit card to help people build up their credit. We're going to be joining the Zelle network. We're going to be introducing shared accounts. Like, there's a whole series of things on our roadmap that we're now able to do from a product innovation perspective. And also, by being a bank, we can use our data in much more profound ways. And I'll talk more about this, but whether it's credit underwriting or fraud detection or personalization, and how we really package the solution in a much more personalized way for our consumer. And so, just to kind of close out this part, like, really my aim from the beginning, and even more so now, I have even more conviction around this, is that if you think about our typical customer who's 35 years old, predominantly female, 50% of our customers are people of color, they're coming to us where they don't have any opportunity for generational wealth transfer. They don't have savings accounts. They're getting charged hundreds of dollars of fees by the banks. They either don't have credit or they don't have good credit. And we're packaging in a very systemic way a solution that, after working with us for a number of months and a number of years, they're actually profoundly changing their financial life. And so what I say to my team and my investors and our regulators is that we want to really own the arc from helping people gain better financial control and stability and resilience to ultimately achieving a state of financial freedom. And then as a bank, we can keep innovating so that we're also not creating a breeding ground for JP Morgan Chase to take our customers after they improve their financial situation. I'm talking to a Chase person here in the room, but that we can actually keep providing the services to help them climb what right now for so many people in this country is a very broken wealth ladder. And the reality is that, again, given the state of inequality in this country, the TAM, the target addressable market, is over 100 million people just in the US.
Interesting. So if you go to any bank's website, they'll try to say that they're centered on the customer. They'll try to say that they have a mission of economic success for everyone that they serve, et cetera. I mean, you also really have tried to build a product and offering that ultimately delivers that. Maybe just a little bit about what is different in your actual go-to-market, and also when's the first kind of moment where a customer of Varo experiences the difference that you're promising?
Yeah, so I think it's a great question. Well, and first and foremost, part of our differentiation is in the brand, in the design, and the way we've kind of rebundled the product offering for our customers, the way we think about and talk about outcomes. And so when customers find out about us, it's typically like we're now advertising on TV. We've got a new brand campaign, A Bank for All of Us. We also have a great partnership with Russ Westbrook, and he's been totally all in on this because he's a huge believer in not only is he an NBA superstar, but, and a fashion icon, but he's a real philanthropist as well. And he's so excited about what we're doing and the ability to create more financial opportunity for communities across the country. People hear about us on Facebook, Instagram, other social channels, and it's really created like a lot of word of mouth. And we're finding the communities where all of a sudden, like, just the number of users are just growing and growing and growing because they're telling their friends, they're telling their families, they're finding out about what this can do for them. And it is about, kind of the say-do. We can, lots of banks say it, but it's like what we actually do and how we've actually designed the product and delivered it to our customers in a way that, actually has a really powerful impact in their life. And so, it's early days now. I mean, we've been operating as a bank for just a little over a year. And we're held to a much higher level of scrutiny than some of the other kind of non-bank players that are out there. But it's just giving us a level of sort of legitimacy and credibility that matters. And one thing that, I don't know, we may talk more about this, but a lot of the fintech players are talking about like sort of the race to the super app, and so PayPal wants to be a super app, and Affirm wants to be a super app. Like one of the people on my team said, they downloaded PayPal and it was like the kitchen sink after a busy dinner party. Like there's all this stuff, and for us, it's not so much about the super app, but it is about the rebundling of the experience. But it's who we super serve, and it's having that sort of deep level of empathy and understanding of the customer that's coming to us, and how we can meaningfully move the needle in their lives. And that's and the way to do that is to have, it's not just a single feature, it's about having a whole series of things that actually have a positive impact in their life.
And so going through this crazy process of regulatory approval and becoming your own bank when so many of the fintech players that have great huge valuations are sort of doing the rent-a-bank a model that's quite different from you. What is the ultimate advantage and disadvantage for you in doing that?
Yeah, so the disadvantage is that we're just subject to lots of scrutiny, and I think that actually turns into a strength as well. But as a de novo and as the first de novo, the national regulators don't want to be embarrassed. Like they don't want to see anything bad happening at Varo that would then cause them to, say like, oh, we shouldn't have approved this charter. And so we are subject to a lot of scrutiny, and that just takes a lot of time and energy. But fortunately, I have an amazing team of people that know this very well. I'd say the advantages, though, far outweigh. And again, as I talked a little bit about the depth and breadth of what we can do from a product perspective, we don't need multiple sponsor banks to offer deposit or payments or credit products, or as we think about crypto and other things, like we can do the whole gamut within the confines of our national bank charters. I think the data advantages, the fact that we have a balance sheet and we can lend, and so we have an economic advantage in terms of our unit costs, are so much better than some of these players that have an intermediary, and these intermediaries have to cover their cost of capital. So there's a real cost there. So our margins are vastly superior than some of these competitors that are out there. So all of that sort of gives us sort of a distinct ability to get into a crowded but huge marketplace and stand out and be sort of a leader in this space. And there's a legitimacy too. I mean, some people say, well, who cares? Do you really need to be a bank? And I'd say that for some customers who are really in dire straits, they don't really care. Like they just want a better service. They want to have something that's free and fast. But for the consumer that we serve, which is largely middle-class America that is feeling like they're slipping backwards, like they have fairly complex financial lives, and they do want to have that legitimacy and that trust that's associated with being a real bank.
I admire how you identified the core customer, someone who has not felt as included and has been taken advantage of historically in the banking system. We all have or businesses or are involved with businesses or want to start businesses where we're going to be forced or prompted to focus on a target customer. And yet, of course, we also all want to get any customer that we can possibly get, especially as entrepreneurs. How do you think about keeping your team anchored on that core customer? Do you believe that are you going to try to expand that market? And how do you think about that?
Yeah, no, that's a great, and it's been a journey. So, I mean, I'd say early on, when you first launch a product as an entrepreneur, to your point, you just want any customer. You're like, what? Like, is someone going to buy my product? I mean, there's all this self-narrative, like, is anybody going to even want this? And then when you actually start to see you're solving a real need, you start to understand that customer more deeply. And it was interesting because we launched initially on iOS, and there was a certain type of customer that was using our product. But then we launched an Android, and suddenly we realized just how vast this market was and the types of customers that were coming to us and that really needed what we were providing. And so it is a journey, but it's super important for all the entrepreneurs in the room that, whatever you do, you have to have an enormous amount of passion and sort of credibility, but you also have to stay so close to your customer. And so we set up a lot of listening posts early on. So we put something called Suggest a Feature in our app, which was essentially crowdsourcing feedback from our user community of what are the things that they wanted. And we were just shocked. You go into the Varo app, there's like tens of thousands of comments and comments on top of comments, which has helped us inform our product roadmap. We also use NPS survey feedback, app reviews, like all of this gets fed into Slack. So all day long, I'm monitoring what customers are saying in terms of the app reviews, in terms of NPS comments, and that allows us to respond very quickly when we see that there might be a problem or when we're starting to see things that customers are really loving, so we can adapt to that quickly. But I would say, being really close and knowing that customer. Now, we're fortunate in the sense that we have such a massive target market that we can serve, but it doesn't provide any excuse for not really deeply understand the things that are working and the things that are not working for customers.
Makes sense. The one more kind of fintech question, and then I'd love to pop up and just talk to you about the journey itself and some things you've learned. And but it's just amazing. I mean, every day it feels like there's another fintech company that gets a massive amount of funding. There is the whole buzz about crypto. And that as a deflation hedge or participating in the next sort of generation of the internet, they're from Square to Robinhood to there's just such a public all these different ways of people participating in different ways in the financial system. You're in depth. You're really in touch with all the models. I mean, how is this going to settle? If you could take us 3 to 5 years into the future, what is it going to look like?
So, well, I think that, I've been, the benefit of being old is like I've been to this party before. So like, I've sort of seen how this, I remember in the first dot-com boom and then, with the mortgage. So like there were people like just get frenetic about things. And so, like buy now, pay later and crypto and this and that. And I'm not saying that there aren't real use cases and that these are gonna do something meaningful in the world. But it's also like there's a lot of froth right now. And so, and what's happening in Washington is the regulators are now waking up and starting to pay a lot more attention. And so one of the things that actually is quite helpful for us is, we made it across this huge moat to become a national bank, but a number of players have just recently withdrawn applications, fintechs, because the regulators have said they'll never approve them. And just because they don't have the sort of depth and breadth of experience, and they just don't, they question the viability of the business models. And I think also now the kind of buy now, pay later frenzy, when so many participants wants to get into a market, it doesn't always end well. And and unfortunately, the ones that it may not end well for is the consumer, because they get enticed to taking on more debt and layering debt, and then we see the kind of emergence of sort of the next inkling of you've got 30% of people who are buy now, pay later, millennials who are behind on payments, and so then what the next cycle is, the regulators get engaged, and then they start to see fines and all the rest of it. So I think that my attitude is like, okay, we've got the charter, we've got a really good product market fit with a huge group of customers. We're just going to play our hand in a steady, measured way, and we're going to continue to introduce new products that are meeting needs for customers, but we're not going to necessarily chase the next shiny thing. I mean, like crypto. I think crypto is actually really interesting, and customers want it. So we'll provide the ability to buy and hold it and sell it, but probably not transact right away, because that opens up a whole new sort of vector of things that could happen. And I kind of want to see how this plays out. But I would say, a few years from now, I'd love to have the whole Varo community actually being able to use blockchain technology to start to interact and transact amongst themselves. I mean, I think there's some really innovative use cases there. But I would say some of that stuff, whenever something gets too frothy, I sort of like, what was Warren Buffett or somebody said that like, get greedy when people are scared and get scared when people are greedy. And, I would say people are very greedy right now. And so it's sort of like, you kind of want to watch and see how things, and the piece that I have a lot of visibility to is just how the regulators and the politicians and the consumer advocacy groups are reacting. And there's been a marked turn against fintech in the last sort of four or 5 months. And so we're just trying to like stay in the sort of privileged position of being a real bank. We've done the hard work, and then just kind of doing things the right way. But it'll be interesting to see. I think the next few years there's going to be consolidation. I think you're going to see some big blow-ups. I think you're going to see some companies. Like, I mean, I have a lot of admiration for the team at Square. I think they're a very inventive company. I think they've done some really great things, and I think they will continue to do that. Also, you know, I know Dan at PayPal. Like, we work together at Amex, and I think he and I share a lot of ethos around you know, what we're trying to do to improve financial inclusion in the country. And so I think they're going to continue to do some good things. But there are a number of players out there that are maybe just trying to be a little bit opportunistic. And those are the ones that, you know, I'd be a little more cautious on.
Yeah, I mean, it's interesting seeing the space from a product and design lens. It's getting increasingly easy to buy something without having to pay for it. Right?
Which that doesn't, someday you have to pay. You know,
Right,
the bill comes in eventually.
And but just like, you know, as that becomes the default in the design of these checkout sequences, and it becomes easier to buy options and to buy crypto and to use leverage and margin. I mean, it's you just look at it from and you're like, where's this going to go?
When your intuition, when your spidey sense is telling you that something's not right, it probably is not right. So.
But listen, it's also hard because, you know, you're in a space where everyone gets so excited about these innovations, and it's a bit of a spotlight of seduction, because I'm sure your team is like, well, wait, maybe we should just make it easier to do this.
Well, and that's a good point too, because like for us, like I think about, you know, here, you know, at the technology campus at Cornell, like what we're doing, the problems we're trying to solve with technology are super hard. Like, you know, sort of using advanced AI to think about eligibility for different types of products, to think about personalization, to think about fraud detection, to think about credit underwriting. And like, we've got a team of amazing like data scientists and technologists, you know, thinking about how we speed up the payment rails. And like, there's just some really interesting technology problems that we're trying to solve without necessarily putting ourselves in a position to you know, kind of be on the wrong side of wherever the politics and the regulatory environment go.
So it's been a rapid scale journey. I mean, just looking a little bit online before this interview about the subsequent rounds of funding and the space that you're in and the escalating valuations and the growing team size and the growing opportunity and the products you're serving. Talk to us about leading such a rapid scale journey, and how do you as a founder, you know, not only stay ahead, but also stay, you know, I guess to Cliff's previous, stay present, you know?
Yeah, trust me. I mean, you know, it's the most rewarding chapter in my career. And, you know, as I said before, you know, I worked at these big companies, I led really large businesses. But for me, the idea of having built something from the ground up, but I would say what's been fascinating is that every year, it's just a different company. I mean, like, I think of those early days where there were a bunch of us trying to figure out the market and trying to build the first product and, you know, iterating around an MVP to get product market fit, you know, going through the whole process of becoming a bank, you know, actually achieving a level of scale, then actually becoming a bank, and then having to convert 2 million customers onto a new platform. And like, it's like every year there's just a whole new set of challenges. And I think part of it is, you know, being very observant of your team, and like the people that are the right people at a Series A aren't necessarily the right people at a Series B, Series C, or like, you know, now we're a Series E company. You know, we're just a very different company in terms of, there's over 800 people. I mean, it was just a few years ago, there were like 30 of us. I'm like, how did this happen? You know, and what you have to do as a CEO in terms of creating culture and scaling culture requires a lot of care and attention. And also, you know, it does require making some tough people decisions along the way. And, you know, I'm fairly proud of the fact that, you know, my co-founders are no longer with me, but I have great relationships with all of them. Like, we just, you know, we got to a place where it's like, you know, I'm not sure you're the right person at this stage if we're going to truly become one of the next great iconic companies. Like, you brought a certain skill set at this stage of the journey. And you know, I've had a lot of those conversations over the last 6 years. And I think as a founder and CEO, if you want to go the whole distance, you have to be very aware of kind of what got you to this stage is not necessarily what's going to get you to the next stage, in terms of, you know, a lot of it is people, but some of it's your tech, some of it's your product, some of it's your investor group, some of it's your board, and you have to constantly be thinking about those things.
Yeah. And it's one of those things that's always easier said than done, because to throw out a winning playbook that you know won't continue to win is really hard, right? Everyone's like, well, wait, we've been doing it this way up till now. Why would we switch it up?
Well, and knowing that that playbook gets outdated, like it's got a sell-by date on it, you know, and it's like, and so you have to kind of reinvent the playbook each step of the way.
So. You know, now looking at the company that you have built and now want to continue scaling, are there a few things that you feel you've really done right, that you're, you know, like tough decisions that were the right ones, and then maybe one thing you feel you may have done wrong, or the jury's still out?
Yeah, I'd say the one that, you know, in any of these things, it's still early innings, but I think the one that will prove to be the winning decision at the end of the day was the decision to become a bank.
Yep.
Like I think that's like so profoundly at the center of what we're doing and kind of the journey that we're on. But I think that and again, all the naysayers on Sand Hill Road that told me that I was nuts, they're all now on my front doorstep saying, oh, wow, this was really a smart strategy. So, but it, you know, it took a lot of validation to get there. But I do think that that was the right decision, even though it did come with some brain damage and heartache. But I'd say the things that, you know, maybe could have done better, and hindsight's always 20/20. You know, it's like you coulda, shoulda, woulda, but you know, maybe acted faster on some people, maybe done some different things in the product roadmap where we spent a lot of time in the early days trying to build a chat bot and building like these insights and all the rest of it. And I had like a whole team dedicated to this when I was still an early stage company. And I woke up and I said, like, I got to become a bank. Like I need banking products. So we had to kind of shelve all of that and like put people, you know, redirect a lot of the engineering and product resource towards actually building really great banking products. And so like that, maybe did we spend a year working on that we could have done something else differently, you know, but you know, I don't really regret any of it in the long run, but yeah, there's some things that maybe some tactical blocking and tackling that we could have done a little bit different or a different order, so.
How about on the talent and people front? I mean, I feel like the market is more competitive and aggressive than ever before, you know, on the talent front. What's your approach to, whether it's through the culture or through the experience you're promising, like your approach of attracting and retaining talent these days?
Yeah. So I feel kind of humbled and honored by the caliber of talent we've been able to attract, but I would really boil it down to, we are very mission driven, and you know, and the best talent out there wants to be part of something that can really bring change to the world. And the fact that, you know, I started this company after a long, you know, relatively successful career. Like I did not have to go become an entrepreneur, but like I wanted to do this because to me, this is a legacy that I want to leave. And if I can help make the banking industry better for everyone, like that's something that's very deeply meaningful for me as the founder. And I think people see that. And we're also solving some very interesting, complex technology problems that I talked about earlier, and have the ability over time to start influencing policy at a national and potentially even at an international level as we scale. And I think those are things that like the best talent want to be part of. And so, you know, I look at the people that I have on my board, on my leadership team, even just the caliber of the engineers and data scientists and designers that come to us, you know, they're leading some of the best companies, and I can't pay as well as Google or Facebook, but I can offer them to be part of something really amazing. And the other thing is we're at an inflection now. So, you know, we've just achieved, you know, as you mentioned, kind of a $2.5 billion valuation, which was not, I don't really care about that at the end of the day, but it's like, but people see like, oh my God, this could be like the next $100 billion company. And like, so there is, I like to say I want to hire missionaries, not mercenaries, but people also sort of look at that and say, oh, this thing could be really huge. And so there could be some financial upside as well. And so that doesn't hurt in terms of when you're having those conversations with people.
Yeah, no, that's interesting. Now again, the background you have in this industry, what you've now gone through, what you see amongst your peers. Maybe you could just share with us a few of the most exciting trends, emerging technologies, and also maybe emerging business models that we should expect in finance over the next 5 years or so.
Yeah. I definitely think, and I published an article last week on Forbes around the sort of fintech 2.0. Like I described fintech 1.0, where you had a number of very successful sort of point solutions where people found a pain point. They built, you know, better interfaces, better products, you know, lowered cost points, and they scaled pretty rapidly. But now it really is about this rebundling. And, you know, again, the in vogue term is the super app. But I mean, to me, it's about how do you rebundle around a real need set that you're solving for a discrete group of consumers. And I do think that that's going to be part of the next challenge is how do you take, and I, obviously the lens that I look at is through financial products, but it's complex. I mean, there's lending, there's payments, there's money movement, and deposit taking, and how do you integrate all of that in a holistic, seamless way for the consumer that all they care about is, can I get from point A to point B? And what their goals are isn't about I need to have 6 products. It's just, I need to get to an answer. I need to improve my credit score. I need to have access to cash to pay my rent, or whatever it is. And so how you rebundle, I think, is going to be really interesting, and it opens up a whole interesting set of data and technology challenges. I also think that some of the more advanced applications, I mean, AI and machine learning have been around for 30, 40 years, but now how you apply it in the context of some of the problems we're trying to solve is really starting to evolve quickly. And I think there's the challenge of kind of how you think about data from a lineage, and how do you create data features, and how do you put features into models, and then how do you apply those models to get outcomes, and then being able to explain all that. That's an actually interesting, complex challenge, but the ones that are going to succeed in the eyes of the regulators and others are going to be able to do some of those things. And then there's obviously blockchain and crypto and some other things that I think are going to be pretty interesting as well.
On the AI side, just quick question, because I never really understood how banks are not allowed to discriminate in terms of loans and stuff based on certain factors, right? But the models that are being trained by all kinds of gobs of data, don't know the difference between what's objectionable and what's not. I don't know. How does AI play into that?
It's an interesting evolving space, because you want to be sure that you're not actually creating inherent bias in your models by using machine learning, because the machine learning is detecting patterns that might be replicating what already is a huge problem in why there's systemic, lack of access to credit for certain populations of consumers.
What neighborhood are you from? And then suddenly,
this is based on many, many years of systemic racism in this country that you don't want to embed that into your models. And so how do you actually start to build features in a way that is trying to solve for that? And now by not having face-to-face interactions, it's all digital. That also creates cleaner set of sampling as well. But there's a number of things that we have to be thinking about very proactively as we're building out this technology. And again, I want to be the one to write the playbook on how to do this the right way. I don't have all the answers yet, but ask me in 3 years.
Yeah, well, it's just a fascinating space, and I oversee also a stock business, and what we find also similarly is that searches in the stock database, the AI is returning results, and it's very biased. When you type in doctor, you'll get more male than female. When you get and it's these are. How do you teach the algorithms, in order to progress us forward? Exactly. But interesting. And so maybe, I think we have a couple of minutes for questions,
let's have a couple minutes for questions.
Great, so let's open it up.
Colin? Oh, a whole bunch already. Okay, microphones, go.
Editors, so. Sorry.
Hey guys, thank you for the talk. So, Colin, you spoke about the team that started with you at Series A, going through Series B, C, and beyond. Sometimes not being the right team for the whole journey. How do you, as a founder and CEO, make sure that you are the right person to be there?
Yeah, well, and I say that to my board all the time. If you decide that I've kind of run past my, I've hit my sell-by date, just let me know. But fortunately, they haven't come to that conclusion. I think I have the benefit of having led very large businesses in the past, and so if anything, I'm kind of growing into my comfort zone. Whereas the early stage stuff was oh God, how do you do this? How do you write code and build product and ship product and all the rest of that? Fortunately, I surrounded myself by people who knew how to do that. But I think as I observe my team, I start to ask questions like, if I had somebody with a different skill set, would this be easier? When things start to break or things are taking longer, or and you start to see the signs that this person might not be scaling well, and then you have to have the difficult conversations, which are never easy to do, but honestly, at the end of the day, people will respect you for it. And they'll be better off too, because they're struggling, and they can, if you can help them see that they might be struggling.
Excellent. Next one.
Jamie Berniker. I'm very excited to see a fellow Aggie leading such an innovator and challenger bank. I work at a small S&L. You might have heard of us, Chase.
Yeah.
We know. So my question for you, and I have this question of many senior executives I have the opportunity to work with and interview with, would love to know what keeps you up at night, right, from a competitive standpoint, right? You talk to some of the larger banks, and they'll say, well, we've got folks like Varro, and we've got people like Citi. I'm curious from your angle, like what scares you, or what keeps you kind of like looking around corners?
I would say, and Scott mentioned this, like there's just been a lot of funding in the space. So there's a lot of money sloshing around, and some of it's a little bit silly money, and I worry about CACs going up because people are just kind of throwing money at something, you know, and wanting to make sure that, you know, our economics, because we do have like pretty amazing economics given our business model, but, you know, if CACs were to double, you know, that would sort of call into question, you know, can we scale at the level we want to scale in the timeframes we want to scale? So those are the sort of things that I, you know, and it's just noisy. It's a noisy space. I feel like we're trying to emerge now, and now that we have a lot of resources, you know, building a brand that is substantive and meaningful, and you know, and can sort of redefine the space a bit. You know, that I'm very excited about. But like, I just want to make sure that we can kind of punch through some of the noise in the space.
Yeah, we'll go right here in front.
Surplus or excessiveness of funding seems to delay the inevitable. And so
that's right.
people who are doing it the right way have to kind of withstand the period of time.
Weather through that, yeah.
Hello, and thank you for what you do. And it was interesting to hear how you started and why you started. And that's almost the unified story for most successful companies. It's always mission-driven, out there to help people, so thank you. My question is, how do you ensure that the mission is carried all the way down and scaled down? Because I'm an entrepreneur, and I started my business 10 years ago, and I've experienced everything you shared. It's always hard to get funding, and it's always hard to even be listened to, how much more get funding. So, and I always believe that it's not the intent of the company, but how do you ensure that the mission of the company is what's represented out there on a day-to-day basis, because this has to be scaled down? And then my second question is, how do you bridge this gap that we're talking about, which is the wealth gap in the nation? I see the U.S. as a big place with straws and pipes. So some places have pipes already, and some people have this little bitty straw. So no matter how much you push from the top, it's going to be a trickle on this side and also a funnel here. How do we break down that whole system and make sure that everybody can come with a cup? So that it's a better distribution.
So I'll try to, I could spend a half hour on this, but I won't. So I'll try. So the first one is really about hiring missionaries at the leadership level who can be very clear on the value and the purpose, and kind of continue to connect people to the why of the company. Like, why does the company exist? And I have to say, like, I personally spend, like, every week I talk to, whether it's people who are on the phones with our customers, to product developers, to engineers. Like, I do these coffee chats just to stay really close to what people are saying and how they're thinking about the company. And it really, I mean, I'm incredibly excited personally by the fact that that mission has really made it all the way through, from the person answering the phones to the person who's, you know, building some complex algorithm for our models. But it requires a lot of consistency of communication, and this constantly going back to why we exist, and creating the forums to communicate that. Your job is never done, because especially as you're going from 30 to 800 or 800 to 1600, like, scaling culture is challenging, and you have to have people who really care deeply about it at the top of the house all the way through. But it is a lot toned from the top. As far as how do we start to address some of these really big systemic issues, you know, Varro is not going to be able to set social policy. I mean, we're not going to be able to create a social safety net. But what we can do is to help with a lot of fundamentals and identify customers that have high intent. So one of the things we focused on are people who have actually pulled themselves up from their bootstraps from having very, very volatile finances, and they're starting to build savings habits. They're starting to access credit. They're trying to build their credit. They're starting to, like, focus on the fundamentals of creating a more resilient financial life, and that opens doors to having more savings, having bigger goals, having access to cheaper credit. And so we're trying to build a system that when people start using this, like they can actually see the progress in their lives. And so it's like it's step by step, but if you can find consumers that actually have a high intent to get into a better, more stable, a richer financial situation, like, I'm not talking about like gobs of riches, but just not having to worry about food insecurity, housing insecurity, like how to get your kids to a good college, like, how to buy a home. Like, these are fundamentals. And, ultimately, the biggest bridge to addressing the wealth gap will be home ownership. And, so we're starting with some of the fundamentals of savings habits and improving credit and giving access to affordable credit. But eventually we'll get into like helping people open businesses, helping people get on the housing ladder. And I think that over longer periods of time will start to address some of these issues.
Super. Over here. Yep.
Here's an eclectic convergence question for you, Colin, and you can do this as thought leader or practical executive. Fintech, real estate tech, insurance tech, are they converging? What's going on there? What are some of your thoughts?
Yeah, well, fintech is sort of a big word that can go all the way back to like the 1990s when Fiserv and FIS and all the rest of them will call themselves the original fintechs, or even PayPal. And it encompasses everything from sort of B2B platform solutions to insurance to wealth tech to neobanks, challenger banks, all the rest of it. So I think that so the big umbrella, I guess you could call fintech. But then within that, I definitely think that there is going to be more consolidation, and because if you think about the whole kind of rebundling process, the other piece of it that when I think about fintech 3.0, it's going to be sustainability. It's going to be companies that do not have to rely on venture funding for forever, that can actually make a profit. And I think that's going to be the next big shakeout, is when investors lose the appetite to just throw billions and billions of dollars at things that don't actually have a viable business model. So I think that will also force some of the consolidation that we'll see and some of the convergence over time.
So one more question. Who has the mic? Go ahead.
Thanks so much for your presentation this morning. Could you talk a little bit about your competitors and how you engage with your competition? I know a lot of the sort of banking options and financial services options for low-income people are quite predatory, especially the ones that are very visible. Yeah. Could you talk about that visibility and talk about your engagement with sort of that?
Yeah, so it's evolved. So I'd say in the early days, we were all a bit more friendly than we probably are now. So like Chris Britt and I used to like chat about, so he's the CEO of Chime, but like not anymore. Like they put us up on panels next to each other just to see us go at each other. And then, but like, I have a very friendly relationship with the CEO of SoFi. Like, they're kind of going after a different segment. I'd say there are a couple of these businesses, to your point, that I do not agree with how they're going about things with like tips, and sort of like they're using social tools to sort of manipulate people to pay more for services, and like those I really have a problem with. And I've been somewhat outspoken in a without naming and shaming specific companies, but that like there's certain policies and practices that some of these companies are doing that I think is kind of predatory and could ultimately be harmful for the consumer and get them deeper into debt traps and not actually being able to get them to a positive outcome. And so I as a sort of thought leader in the space, I've tried to like provide my point of view on that without necessarily trying to have such sharp elbows with other competitors in the space, because there are a lot of innovators that do have good intent, but there are some that are opportunistically sort of taking advantage of the situation.
So I lied, Colin. We have one more question. Okay, sure. Over here.
Colin, just want to hear your comments on the threats from crypto on the traditional banking system.
Yeah, I mean, it's interesting. Like it's evolving. I don't know if it's crypto so much as will there be like a digital, like a stable coin currency that like to the banks, like if suddenly the Federal Reserve wanted to open up bank accounts and start issuing and holding those deposits, like would it affect banks' leverage ratios and stuff like that? Like there's sort of capital and liquidity considerations. Will blockchain disintermediate certain types of payment methods that banks are relying on for revenue? Absolutely, I absolutely think. But so will I. I mean, I'm helping bring down overdraft fees and minimum balance fees and all the rest of that banks banks have historically relied on to protect their margins. So I think that, I think crypto is going to be, it's going to be interesting to see how the sort of broader economy, I mean, like if you want to buy crypto kitties and NFTs and all the rest of it, but like when it goes mainstream in terms of like you could buy your everyday purchases, which there are some ways to do that now, but the underlying currencies are still fairly volatile. So there's an inherent risk associated with that. So I think that, stable coins to me feel like the ultimate answer in terms of creating digital currencies that don't have all that inherent volatility. And I think the banks, unfortunately, the big banks, you guys will figure it out because you're big and mammoth and you've got a real focus around a customer segment that I really don't care about, that you guys care a lot about. But like, I think some of the banks in the middle are going to really struggle because they don't have the technical capabilities and they're trapped in sort of old core systems, 10-year contracts that are going to, potentially there's going to be a huge consolidation within the kind of the middle of the banking system, because as these technologies unfold and consumer behaviors change, those that have more adept, technical capabilities are going to adapt much faster. So it's going to be interesting to see. But I think, the crypto piece has definitely become more mainstream than I probably would have even anticipated 5 years ago. You talk to someone who's pulling up to move the neighbor's furniture and they want to be paid in crypto, you're like, it's like the number of people that actually have crypto. And I think Cash App and others have helped sort of make this much more widely accessible. But in terms of the stability and will it be, could it actually have real negative outcomes for people, given just the inherent volatility if they start using it to pay their rent and other things like that caused me a little bit of concern in the short term until we get to more of a stable coin type situation.
So I lied twice.
Yeah.
One more question, and I promise this is the last one. I hate to cut people off, by the way, but we have to stay a little bit on track.
Thank you for the presentation. Earlier you mentioned something about having passion and credibility, and that being a big part of success. That made me worried because I'm currently trying to build an app, but I've never built an app before. I'm a mechanical engineering major, and I don't have any experience with that. So do you think that's something I should worry about now? Once I start reaching out to companies to adopt the app, do you think my lack of history in the field would be something I should worry about now and maybe work towards? Or do you think it should be fine?
Yeah, I think you'll be fine. I think as long as you've got clarity around the problem you're trying to solve, and again, you have a lot of passion for that. If it's just something that you kind of thought up over the weekend and sort of, oh, maybe I'll do this, maybe I would question it. But if it's something that you care a lot about and you've really researched and you know the problem, you understand how your solution is going to solve that problem and how your app is going to solve that problem, and you can surround yourself with a few people that also kind of have that skill, and they may have some complementary skills to you. The other piece of it is you're not in it alone. It's really around the people you bring along in the journey with you. So if you have certain gaps in your skills that would be helpful, it could be sales and distribution, it could be development, it could be something else, but making sure you have some partners on the journey with you that could also help address where there may be some gaps in what you're trying to do. So because it does take a village for sure.
Excellent. Colin and Scott, thank you so much.